So the Federal Reserve is starting to give us a bit of a warning, and in this video I want to go ahead and touch on what we're seeing in the economic landscape, but also touch on the price action that we're seeing within the broader markets. And of course, we have a lot taking place. For example, we are seeing volatility take place within the markets, but this is perfectly natural as we know the election is right around the corner, and based on a lot of the poll data out there, it looks like surprisingly this is a very tight race. And so of course there's a lot of uncertainty into the market, which is leading the overall S&P 500 index ETFs to kind of have a bit of selling pressure take place. But I want to go ahead and touch on what we're seeing from an economic perspective, because of course the election only really influences the short-term directional move in price action for the markets, as the markets move based off fundamentals and the economic cycle that we're currently in, and not really from a long-term perspective, just simply based off the election. And so what are some things that we're actually seeing? Well, one of the things I want to mention is that we had recently Nick Timos, or I always mispronounce his name, we'll just say Nick T, who is essentially the Federal Reserve whisperer, right? He's a journalist from the Wall Street Journal. And of course, it always seems like he has kind of this closer insight with the Federal Reserve. We see him always, of course, at the press meetings, at the FOMC meetings. I think he has one of the best questions every time he asks. Some of the other people from other media outlets sometimes ask silly questions, but Nick Timos pretty much gets it on the ball each time. And he recently made this post on X saying that a 25 basis points cut is widely anticipated, kind of alluding to the fact that there is a 99.5% chance that we are going to have a 25 basis point cut. This is what the future markets are pricing in. And so, this kind of solidifies that. We're having the future markets kind of price that in, but then we had the Fed whisperer, aka Nick Timos, say that, look, 25 basis points is widely anticipated. And he mentions that the officials are trying to get away from being overly data reactive, and how there's this inflation, that progress that's helping, but there's this puzzle that's looming over solid consumption and slowing employment. And so what he's kind of alluding to is kind of this economic puzzle that we're having, where we're seeing strong consumer spending coexist with this cooling labor market, which is a slower job growth. And that could, kind of show you, or that really shows us that there's this unusual economic dynamic where consumption remains resilient even as job creation is slowing down. And that creates a challenge for the Fed, right, to balance their policy decisions. And although things would kind of seem likely that the Fed would want to go ahead and pause, it looks like they're likely, of course, with the Fed whisperer kind of saying this now, going to do a 25 basis point cut. And it's probably because they're trying to avoid just being overly reactive, like what he said, to the data, and kind of being a bit more forward looking as what they should do, right? And avoid kind of this flip-floppiness that we're getting in a lot of the job data, and kind of prevent a recession. Because of course, if they act too late in terms of cutting, well, then it could be a whole scenario just like back in 2007, 2008 during the great financial crisis. And so we're having the Feds kind of let us know, or kind of, the Fed whisperers kind of telling us, hey, the Fed is likely to do this 25 basis point cut, and it's because they don't want to go ahead and be late to the party, as they habitually are, right? And so that's something that's pretty interesting. Now, I also highlighted this within the newsletter, which, again, it's free. If you don't have access, make sure to check out the links in the description below. I mean, why wouldn't you want to have access to my free weekly newsletter where I talk about what's going on in the markets? But in that newsletter, I shared this portion over here saying that we have a lot of central banks making rate decisions this week. And I know some of you guys may say, but Justin, I don't care about what's going on globally in the world if I'm trading US equities, right? Especially if you're trading stocks like, let's say, Tesla, or let's just say, I don't know, Snapchat, right? You're trading American companies. But the reason why I try to put a focus on what's going on globally, right? You can't ignore what's going on globally in terms of monetary policy, because that could influence what's happening globally, can influence global capital flows, right? And so we actually have a lot going on. On Tuesday, we have Australia. Then, of course, on Wednesday, we have Poland, Brazil. And then, of course, we have a few other countries like Norway, Sweden, happening at the same time that we have our changes with our central bank, which is the Federal Reserve. And when these central banks and these other major economies adjust their interest rates, it has this influence on global capital flows. For instance, if a central bank is tightening while the Fed is easing, well, global investors might redirect their capital to a higher yielding market. And so we're kind of wanting to look at is kind of trying to pay attention if we're seeing this pattern take place globally with rate cuts taking place, which I think is likely to kind of be the scenario that we get, especially as we saw Canada, who's been leading. Right now, Canada, they don't have anything going on this week, but they did previously. And Canada was the first one to actually start the hiking cycle and the first one to cut. And so that's why I think it's important to pay attention to what's happening globally, as we have a lot going on from a lot of these global central banks. But again, we're likely to get that 25 basis point cut as the Fed doesn't want to be late to the party. And I think that's something that, of course, we want to monitor as we still have a lot more data that we're going to go ahead and see come in. Now, from a technical perspective, and if you guys know that if you're following the channel, I don't like to just invest or trade solely based off technical analysis. I think that's imbecilic to do so. And I think, you should always use a confluence of different data points together. But taking a look at things from a technical perspective, right now we just broke below this area of previous, it was a resistance in the past. And so it acted as a support in the past after it was resistance. So we broke below that. And I have this next area right over here at 559. Now, the way I like to map my levels is I actually like to switch over to a line chart as Charles Dow, who is the founder of technical analysis. He believed that the closing price was what was more important because that was the price where buyers and sellers settled for the end of the day. And so you guys could clearly see how I map out my levels. And what we're wanting to see is, do we hold up above this area from this $559.80 area? Now, real quick, I do want to highlight that, interestingly enough, we are holding up above the 50 moving average, right? The 50 bar moving average. So that's something that a lot of financial institutions use. Typically when they're doing, first of all, a lot of financial institutions, they rely heavily on fundamental analysis and, quantitative analysis and also alternative data. But when they do use technical analysis, they tend to use the 50-day or even the 200-day moving average. So that's why we like to look at that as well if you're a retail investor. And so we're actually holding up. But just because there's weakness in the broader markets doesn't mean there isn't strength in other pockets of the market. For example, for those within the Push and Profit private group, we actually just saw Victoria's Secret, which was a trade idea I shared on the 17th, just go ahead and make another new high for this certain period, right? And this was a trade idea I shared on the 17th at night, so after the market closed. So, we got in as a swing trade on the 18th. I'm already out of this position. I closed a nice little 12% swing trade, but we saw that this actually continued doing, and it's up 20%. In just a matter of just a couple of weeks. And so just because we're seeing weakness in the broader markets doesn't necessarily mean there aren't pockets of success elsewhere. And we also have to remember, yes, we have an election going on, right? Yes, we have changes in monetary policy coming along, but we're still in the middle of earnings season, right? For example, above about 60% of companies already reported earnings, but we still have companies like NVIDIA who haven't reported earnings, which, by the way, NVIDIA, it's actually looking like it's likely to make new all-time highs. So we'll definitely continue to watch NVIDIA, but that's actually a separate video. We'll probably talk about that in a separate video. Real quick, let's talk about Tesla. As Tesla is something I talk about quite often on this channel. And look at that. Tesla is just falling down from this recent high point that it made back on the 28th of October. And I believe that Tesla, if it breaks below this area of this descending trend line, could likely get close back to that 214 area. And so while everyone thought I was crazy for not buying here, I think it's very possible that we may retrace back to this area over here. But again, you should only trade and invest in whatever you see value. I already made a video explaining how, yes, I've been holding Tesla in my long-term portfolio. I'm not selling Tesla. but I just didn't buy more back at these points, as I believe that from a fundamental perspective, Tesla's still overvalued, and I'm waiting for it to come down to a better price area to add in. And I in a separate video, talked about why, even if you're bullish on Tesla in a 10-year perspective, you don't want to overpay for what the discounted value of the stock is right now. You don't want to pay higher than what its intrinsic value is, even at today's price, even if you believe it's going to be worth more in the future. And I think me talking about this is already going too far. I may be losing heads here. So I try not to go too deep on these videos, okay? If you want to get more deeper insights into the market, that's going to be one of the links to join the Push and Profit private group, where we kind of talk about some trade ideas and what's going on in the market. But also, real quick, again, just to kind of let you guys know, the newsletter is free. And so if you guys want to read this newsletter, I send it out pretty much on Saturdays and Sundays every week. Definitely check that out. So, just kind of plugging that in there. It's free. Why wouldn't you? But taking a look at market breadth, I always like to kind of break that down as well, kind of look at different sectors. And interestingly enough, let's take a look at, so the financial sector is kind of pulling down here. When we look at XLV, which is a healthcare sector, it's kind of hovering, consolidating around this area. We take a look at consumer discretionaries, kind of hovering. Technology kind of taking a dive, and then the equally weighted index is kind of falling down as well. So there's very little pockets of safety right now, as everything's either falling down or consolidating, which is why we've been hyper focused and targeted on specific names within the Push and Profit private group, like Victoria's Secret, which I'm already out of the position, right? Whatever it does now, it's fine. But again, there's a lot of weakness going on, and I think this weakness is probably going to last for a few more days as we have the uncertainty of the election. And we have to know that even though the election, we have November 5th coming, right? It could take a couple of days. Unfortunately, we're not like other companies where they get their decision immediately. It takes some time to count in the votes. So that uncertainty could last for a couple more days, as well as, the uncertainty of the Federal Reserve, which is going to happen on Thursday. But you guys let me know in the comment section down below, what are your thoughts on the broader markets, and what are some names in particular that you're looking at? Remember, I love when you guys share ideas in the markets. Even if I don't disagree with them, I think it's always nice to hear a different perspective. But you guys let me know in the comment section down below, do you think the S&P 500 is going to break below this 50-day moving average and come down here to 559? You let me know. But real quick, make sure to subscribe, and I'll see you guys on this next video right over here. Take care, guys.